Recently, a popular mutual fund company launched Nifty Microcap 250 Index Fund. It's the first of its kind. No other fund house has ever launched a microcap index fund. So it's interesting and it's important to understand what microcap as a segment is. Now, as per SEBI's classification of indexes, the top 100 listed companies as per the size of their market capitalization form what is called large cap. The next 150 are the mid caps, and the next 250 are what is called the small cap. We all know this. So out of the top 500 listed companies by market capitalization, which is nothing but the number of shares into the price at which it's trading in the market, is divided among large, mid and small cap. Now, therefore, what is microcaps? As per SEBI's definition, anything beyond the top 500 is called the microcap. Now, within this, the next 250 stocks by size is taken by NSE to create this new NSE 250 microcap index. Now, this is stock number 501 to 750. That's the unit population that kind of makes up the 250 microcap fund. Now, why must one look at microcap? Especially given the fact that it attracts less than 3% of the total monies into the market. So if large cap attracts about 70+% and mid caps attract around 12 to 14% and small cap attracts about 6 to 8%, then by the same token, this segment of the market attracts only 3% of the overall money that comes in. So why should somebody really look at this as an investment? Is there an opportunity out there? That's what we're going to explore in today's video. Now, microcaps are a very, very risky segment of the market. Unlike the large cap, which consists of established companies that have a great track record and are blue chips and are widely in demand, microcaps are small companies. They are listed, of course, but they are relatively smaller businesses, even sometimes in one small narrow arena of activity. So they represent a much higher risk than any other fund in terms of risk, because some of these businesses may not survive in the long term. However, the opportunity is that when some of these businesses perform, they are going to give outsized returns. What in stock market is referred to as multi-baggers usually happen in some of these microcap segments. So that's what investors need to look out for. Now, just so that we understand this space, the Nifty 250 microcap index is an index created with a base date of 2005 by Nifty. As I said, it consists of 250 stocks, largest segment of microcaps, which means they are by market capitalization 501 to 750 in stocks, comprising of a wide variety of different industries, of which industrials and manufacturing is the highest number. Now, the reason one should look at this is the recent 3 years, microcaps have delivered 58% annualized returns on the last 3-year basis. As compared to any other index, this is the highest return. Even if you were to go back to the history and look at it from 2005 till date, that's roughly an 18-year track record. Microcaps have even outperformed small caps. So from a long-term wealth creation perspective, they are really a good place for investors to look at putting their money away. However, important to note that when markets tend to fall, micro caps tend to have a much bigger fall than either large caps or mid caps or even small caps for that matter. So to that extent, it's not for the faint-hearted. It is for people who are looking at it in a really, really long term and are willing to wait for some of these companies to really perform and thereby add value to their portfolio. Now, looking at how some of the investors can make investments into this, we would recommend that investors who are reasonably savvy alone venture into the microcap segment. Anybody looking to make good returns must look at a 7 to 10 year horizon in the microcap space, because that's really the time when some of these investments will blossom and give you tremendous returns. Anything shorter, you may get it right, but there's also a big risk of a negative happening at that point in time. So always wiser to look at a 7 to 10 year investment horizon if you want to take part in this journey. We would recommend you to participate by investing regular investments. So an SIP would be our ideal route to create wealth on this platform. If not, try and do a systematic transfer plan if you have lump sum to invest. No lump sum investment at any given point in time. That would be our recommendation. And like I said, if you're somebody who's looking at near-term returns, say you're a retired person looking at near-term cash flows from your investments, this is not the place for you. This is clearly somebody who's much younger, willing to take a higher bet and willing to give it 7 to 10 years time would benefit more from the microcap segment as an investor. So in a nutshell, high risk begets high returns, and that's really the rule of stock markets. So if you want to look at long term and are willing to take a bet on some of these tiny companies which may turn out to be the multi-bagger over a 10-year period, then you should look at microcaps. Having said that, it's entirely possible that your investments that you make today could be underwater next year, because by its very nature, microcaps are very, very volatile. So in the short term, expect a big negative on your portfolio, but in the long term, could turn out to be a multi-bagger. That's what microcap is all about. And if you have the stomach for it, and if you're looking at it in the long term, these may be the right space to look at. There is only one fund which recently came out with this index, but given the fact that this is now public and more people will be looking at this segment, we expect a lot more fund houses to come with the microcap index funds. So keep your eyes peeled, look at this space. I'm sure there's going to be a lot more action in the coming days in this segment of the market. Happy investing.